Hi, this is Jeffrey Kerr at Kerr Financial Group, and today is Friday, February 21, 2025. On Wednesday, the S&P 500 hit another all-time high. It was the sixth one for this year. A couple of comments and interesting points, I think, about the record highs and what's going on in the markets. Let's cover that today. First of all, when you're at an all-time high, it's easier to put some of them together, so that's not a huge, remarkable achievement that we have six of them so far in 2025. But I think what is kind of the leadership is kind of notable, and we would all expect that the Mag 7s, the Nvidias, and Facebooks and Microsoft like that would be leading the way, and that's not the fact. Amongst the sectors of the S&P 500, energy's leading the way this year, up 8.4%. Communications up 7.9%. Healthcare up 7%. Technology was the third worst sector. It's up 3% for technology, but the third worst sector in 2025. Another interesting thing is that consumer discretion is actually down on the year, and that's attributable to Tesla. I don't know what a car maker or technology company, or however you phrase Tesla, ends up being a consumer discretion. But that's where they park the Tesla in the sector. So Tesla's been been a bad stock this year. It's down significantly. Nvidia's flat for the year. Tesla's down. Apple's down. Microsoft down. Amazon's flat. Google's down, and Facebook has been the big winner among those Mag 7. So you've got all-time highs, but a totally different leadership. Another point I think is important to bring up is that we're reaching all-time highs in face of a higher inflation, interest rates that probably aren't coming down very soon, the tariff talk, the budget deficit that we've got to address, the debt ceiling that we've got to address, the Washington purge, and then stuff like DeepSeek. So you've got all these things going on, and yet the stocks keep going up. Barron's, I saw Barron's did a brief article about this. They didn't really explain it that well, but I'll take a stab at it. I think that a lot of this is a function of being able to hedge short term, and also a function of computerized trading and algorithms. And I think that, this, I've been mentioning this, I think risks are elevated, but there's maybe not been a catalyst yet that has triggered, some sort of correction and move to the downside. And maybe it doesn't happen, maybe it does. There are a bunch of historical statistics that, historically would point towards, a lot of risk and a correction and like that. For example, the correlation of the stocks trading together is at a point where, in 2008, right before the financial crisis, and in 2021, I think when the COVID hit and like that, this had similar setups. That all of a sudden, the rug got pulled out of the market. So that stuff's out there. I'm not saying it's going to happen, but I think you got to be on the watch for that, because again, these things are lining up. And again, the markets can keep grinding higher. There certainly are some things that support the economy's going to be doing pretty good, I think, and like that. But there's a lot of risk there, and I think it's interesting that the market's making all-time highs, but for reasons that we are different from what I think we've been accustomed to. So that's it for today. Thank you for listening, and we'll be back on Monday. Have a great weekend. Goodbye.